I'll jump in. I added one more chart here. And I added this chart because we watch every day and watch how volatile natural gas is right now. And oftentimes we see something that's so volatile and we're like, oh, that's crazy. Can't really trade it because it's too risky. But that name really flies around. But if we just look at natural gas and we use the implied volatility bands, implied volatility bands is the expected move where we're going to find support and resistance. But you could follow something like natural gas, and that doesn't mean that you have to trade natural gas futures, which obviously natural gas futures, you could buy it here and it gets a zero line, that's 18 grand, but that's a really, really, really pricey contract. Instead, you can find an ETF, and I'm using the ETF UNG, and you can see UNG and natural gas are darn close to being perfectly correlated. I mean, it's really the same thing. So, good thing to keep an eye on, and as you can see, trades down at the beginning of December, right back to the band, and then goes right back to that zero line. So I'm always looking at what's moving, what's the craziest, most volatile kind of asset classes, what's in play, and then how can we trade them? How can we control the risk? So that was the intention of pulling this chart up. Yeah, I just think it's a really cool way just to find different trades while we're just hanging out on the edges.
And UNG has some decent options, priced relatively cheaply, and you won't get your face or head ripped off like you would if you're trading natural gas futures.
Absolutely, absolutely. I mean, they're liquid as can be. They're fine. And then look, I just want to show you one more thing before I throw it back to States. And this was more of a little trick that I did using the edge tools. If you hit the beaker, for UNG, I had to play around with the size in order to look at the chart. Because if I just did this on, say, using 700, it's going to look like that, and it's not going to really give me a lot of information. So that's why, in order to just kind of line them up, I wanted to make that UNG worth as much as that natural gas contract. And so there's a little bit of trial and error, but obviously you can see how nicely that presents and how much you could learn from that, as opposed to when I just had it on 700 shares. So don't be afraid to experiment and play around with that a little bit. No, so Mike, it's not so much a DB01. I was just looking at this and saying, okay, when natural gas bounces, where can I see that in UNG? I just wanted to overlap them. Yeah. Yeah, and obviously it presents great. And it's a way that you could trade natural gas, and risk a couple of $100 if you wanted to make a trade, as opposed to natural gas futures, which are out of reach, for anybody under a six-figure futures account. Very cool, something I've been playing with a lot more. And then we can do the same thing using heating oil ETFs, using gasoline ETFs. Another cool way just to use the edge tools.